Hello, everybody. It's Dan Bossi coming to you from Jeddah, Saudi Arabia. I'm here with the International Wheat Millers Conference that's being held here. The conference is well attended, about 650 wheat traders and millers from around the world. We're taking and hearing a very bearish attitude towards world wheat. The Argentinians dropped their wheat price to $198 for 10.5% pro, 12.5% pro. Hard to find an offer, at least in Argentina. But world wheat prices are sinking on oversupply and people looking for demand. Also speaking to a lot of cash soybean traders in the United States and world exporters, no evidence of China since last week, Tuesday. So they bought some soybeans last week, Tuesday, after the Z-Trump call on Monday, but nothing since then. So it really makes me wonder how we are ever going to get to 12 million metric tons on a cash basis as we look forward to the December 31st. That's the promise that the United States says that China has made, but again, no confirmation on what the deal is from China. Other than that, Ben, I know you're in Minneapolis today also with meetings, so we're traveling. It's a busy time of the year. What do you got for us up there?
Yeah, I think first explaining what grain markets are doing and wheat specifically. The reason why Argentine wheat is so cheap is because the country, and this may be an issue for corn as well, a lot of water started raining on July 15th in Argentina, in the major grain belt, which is abnormal. Crop ratings of wheat incredibly high throughout the season. And now we're getting pretty thorough yield reports from the Buenos Aires Exchange. So cumulative yield at 30% harvest is just over 53 bushels an acre. That's a new all-time record. If you run this correlation between yields today and final yields, they probably are going to see, for the first time ever, an annual national yield of over 4 tons per hectare. That gives you a crop of at least 25, maybe 26 or 27 million tons. They don't feed wheat in Argentina. There's really no domestic demand. So this is going to have to get cleared through price, and that's happening pretty quick. And I think what the wheat market has to deal with as well is larger Australian production. All this wheat in the Southern Hemisphere is being harvested today. Argentina probably wants to clear this excess supply of wheat, especially before the corn harvest begins in March. So Argentine wheat and Argentina dominate world trade during the winter months. But it just, as expected, wheat yields in Argentina are performing incredibly well. And so that's why that market is priced today as a feed grain. And I think that's the issue for grain markets as a whole. We knew Argentine Southern Hemisphere wheat was going to be abundant. Even prior to the Southern Hemisphere growing season, there were really no issues with world wheat supplies. It was the market's oversupplied. Clearing inventories dominates price discovery. But now that Argentine wheat is priced below Argentine corn, U.S. Gulf corn, I think that especially in Latin America and neighboring markets, we are going to see some trimming of corn feed use because that Argentine wheat is priced to sell. And to that end, I think, too, what we're thinking about the corn market, I mean, even the milling wheat market, Russian wheat, 227, that really puts a cap in Chicago wheat, I think, at about 460 basis March. That's when the corn market starts to lose demand to milling wheat. But today, it's Argentine wheat is the cheapest grain on earth and still moving lower in terms of price. So a lot of competition for grain demand, I think, is the theme, corn and wheat especially. Soybeans also, we are flirting with chart support. I kind of remind everyone to take a look at those charts. And I think how this evolves is the market's been totally driven by politics, which makes a lot of sense. China's buying of U.S. soybeans. But now that the calendar is flipped to December, it's a month we know we can quantify as being critical to soybean yields in Brazil and corn yields in Argentina. And it just looks very, very routine to maybe very good. What you're seeing on your right is the AI ensemble models, the best performing model. It's 2-week precipitation forecast, just an abundance of rain in Mato Grosso. No one goes without water. It is a little drier than normal in Argentina, but what you're seeing on the left is recorded rainfall there since November 28th. And you can see parts of Buenos Aires, 3.5 inches, 2 inches, pretty common. So there's not going to be any water issues to speak of in South America. We're making, I think, big crops. Now we've pushed any real risk of supply threats probably into the month of January. And so you're running out of time at some point. We know Brazilian soybeans start to get harvested really January 1st. And thinking about the wheat crop, its response to abundant soil moisture in Argentina, what yields are doing, what crop ratings were throughout the growing season. Corn is starting the season in a similar fashion, at least. Argentine corn last week, 82% good to excellent. That's the highest in the last decade. Was just 36% good excellent a year ago. And again, the Buenos Aires Exchange is telling us there are no water issues today. So if you fast forward 30, 40 days and crop conditions are the same, are you dealing with an Argentine crop of 60 million tons? So the exporter's got to clear wheat. We'll have to clear corn. So I think just the general framework of grain markets to us is still one of adequate to oversupply. It's really hard for us to tighten global balance sheets, and I think the USDA will have the same problem as well. I do want to mention the Chinese corn market is firming. I don't know if it's doing anything particularly special, but spread between Dalian corn in China and U.S. Gulf prices, and you can see we're still below average and really haven't done much in the last 2 weeks. So I don't think there's any sign that China's going to import corn from anywhere other than maybe Brazil, and even then it's probably going to be a pretty small tonnages. So we don't see a lot of demand growth in the grains. Soybeans still all very political. Otherwise, not a lot new, fresh. I think that our guiding light's going to be Brazilian, Argentine weather, and to provide the framework. The growing season doesn't last much longer. I think if you've got decent weather into the first week of January, you kind of locked in something like trend yields in South America, and those crops come at the market pretty quick thereafter. So that is, I think, what we're staring at. Still like managing risk on the short side.
Ben, I think it's a really good rundown, and thank you for that Argentinian stuff. If I look back at the last month, the rally in soybeans and a little bit of corn has all been based on China hope. We have seen some China demand for U.S. soybeans, but the rest of the world markets are in decline. And as that Chinese hope gets filled in the United States, either with purchases or non-purchases, I think that world market comes at us. And that's a good point that you're making in terms of longer term price potential here. This is Dan Bossie and Ben Buckner signing off. We just wanted to come back and update you on where we see markets. We're still bearish, unfortunately, but we keep looking for an opportunity to change that view, but nothing here today. Be well, everybody. Bye-bye.